They got me on a remote mic. How am I doing? All right? Okay, great. Okay, thank you guys. Today's talk is called The Time Value of Bitcoin. It's an article that I wrote last June. It has seemed to gain some attention in the Lightning Network community. So I'm really happy to be involved in Bitcoin and Lightning Network. So thank you guys for reading and for coming to the talk today. The time value of Bitcoin. This is derived from three things that we can observe currently in the Lightning Network from transactions. Firstly, the amount of capital that you invest in your Lightning node. So what do I mean by that? Primarily, the amount of Bitcoin that you use to open payment channels in the Lightning Network. This is your capital that you have staked. However, there also are external costs. For example, if you are starting a new node, you have to pay for hardware, bandwidth, electricity. So there are some external costs as well as the actual true cost, which is the actual channels that you have opened and the Bitcoin inside of them. The second thing that we can observe is the amount of routing fees that you can collect. So in the Lightning Network, it is a payment routing network. And to route payments, we can all accept Satoshis as fees to process those payments through the network. And that is what I call the income component to our interest rate. The third thing is time. You have capital, you have income, and you have the time that it takes to do so. Those three things we can observe are the only things that we need to calculate an interest rate. An interest rate is just the capital that you've invested, the income that you make, and the time that it takes to do so. So the Lightning Network actually gives us a framework to calculate interest. And this is extremely exciting for many reasons, but primarily for the reason that we are not taking explicit counterparty risk when we stake Bitcoin to a Lightning node. In typical capital markets, when we lend money, we are actually foregoing that money for a period of time with no guarantee whatsoever that that money will be returned to us. We are trusting in our counterparty that that counterparty will pay us back plus interest at the agreed upon time frame. In Bitcoin, in the Lightning Network, this equation is actually changed a little bit, in which we are staking Lightning Bitcoin to the network, using it as routing capital, and never actually giving away our private key or sending our Bitcoin away from our own custody. And this is extremely unique and something that I find very exciting from a financial theory perspective. Now, we have these three observable variables in the Lightning Network that we can observe the interest variables from. What is most exciting to me now is that we actually have Lightning Network node routers and participants that have already decided to disclose this data to us, to the public. And I will cite two people or entities in specific. One is the BitMEX research team. Now, as you know, BitMEX is one of the largest exchanges in the world. And the other is Alex Bosworth of Lightning Labs, one of the three companies that has a Lightning Network implementation aside from Blockstream with C Lightning and the ASONC team in France with Eclair. So we have two very prominent members of the Bitcoin and Lightning community that have already disclosed their interest rate to us using a framework that is very, very similar to the one that I've described in my work. BitMEX Research has disclosed a rate of approximately 1% on their routing activity, and Alex Bosworth of Lightning Labs has disclosed a rate of approximately 25 basis points, or 0.25%. Now, These rates by themselves are not thrilling to me. However, the fact that they are disclosing their rates to me is exciting. Why do I say that? We don't actually have a way of verifying the BitMEX rate and the Alex Bosworth rate. Those are disclosed from them to us, and we have to trust them that that's the rate that they've actually earned. Now, this whole leap of trust is not necessarily in tune with the Bitcoin ethos of everything being trustless, but you have to understand that capital markets require a little bit of trust as we go forward into the lending arena. So Bitcoin Lightning Network now has an established time value where certain large entities in Bitcoin are saying, this is what I've staked to my Lightning node, this is what I'm earning right now, and this is the interest rate that I believe that I am earning on capital foregone from other investment opportunities to routing activity on the Lightning Network itself. And this concept itself, I think, is extremely exciting for all those that think that financial theory derived from original native Bitcoin transactions is possible. This is not counterparty lending that we're talking about here. This is actual transactions in the Lightning Network that we can observe to create a reference rate for Bitcoin itself. Now, what is the goal here? The goal is to have an open-sourced interest rate of Bitcoin. What is the time value of letting your Bitcoin allow Lightning Network routing transactions and activity? Maybe it's 0.25%, maybe it's 1%, maybe it's somewhere in the middle or above or below. How much it is not really the most important thing. The fact that it's not zero is really groundbreaking for Bitcoin. And the fact that it's not zero can allow Bitcoin to establish a native time value that we can reference in the lending market. So what does that mean? In the traditional markets, we have the US Treasury. They are typically referenced to as the most risk-free counterparty in traditional finance. Corporations like Walmart or Amazon can issue bonds to the market, but they don't issue them at an interest rate like 4%. They issue them at treasuries plus a credit spread. Why do they do that? They do that because they have to account for the time value of money and the risk premium that is associated with their own entity. So the time value of money right now for the US government is about 2% for 10 years, annualized. I don't know Walmart's exact credit spread, but let's say it's 1%. That would make Walmart 10-year debt 3% when the US Treasury is issuing debt at 2%. This 1% spread between the Treasury and Walmart is what we call credit spread. The 2% that the Treasury borrows at is called time value. So Bitcoin's time value perhaps can come from this risk-free Lightning routing activity, and borrowing entities can reference the Lightning Network time value and issue at a credit spread on top of that. So this is my vision for Bitcoin lending markets and a way forward for how I think capital markets can evolve in Bitcoin. This could set Bitcoin truly apart from all other assets. Why? Because the fiat world, the dollar world, the euro world, they use governments as their time value. But governments have their own credit risk, right? The US government won't default tomorrow, but might it default in 5 years, 15 years, 25 years? we don't really know. So the time value that the US Treasury offers to us actually has some credit spread as well. We don't really know what it is, but in traditional finance, we strip out the credit risk from the governments and we just think of it as time value. In Bitcoin, we can look at the time value without a counterparty component. So I think that's really exciting. That's what I've written about. You can find me on Twitter at time value of BTC, and I have a blog on Medium where I discuss the time value of Bitcoin at time value of BTC as well on Medium. So please check out the work, and I hope you like it. And I'd love to take any questions if we have a couple minutes. Thank you. Sure.
So in the future, if routing is competitive and there's a competitive commercial landscape for that, why would any individual major... So in the future where routing is a competitive industry and there's a commercial competitive landscape for that, why would any individual channel manager want to reveal this information? Aside from it just being a public good.
Sure. That is an excellent point, and my response to that is that you have public businesses and you have private businesses. Private businesses have no incentive to disclose their profitability. They have private owners. They are gaining cash flow from their business activity. They don't want to share that information. Public businesses get cash flow and they want to disclose how profitable they are in order to raise more capital to leverage their current activity to a greater extent. So you will have Lightning node routers that are not concerned whatsoever in disclosing this information. They will keep that information private. You will have other routers that are actually really good and think they can leverage other people's money. Let's say that they're earning 1% out in the network. They can say, hey, I will offer you 0.5%. You give me your capital, I will leverage it. I'll give you 0.5%, I'll earn 1%, and I will collect the difference for profit for myself. So kind of following the normal business activity of private and public businesses, that's how I see Lightning Network routing activity evolve. We have time, yeah.
So how does interest rate relate to inflation or disinflation in the Bitcoin space for a fair interest rate? What's your thinking around that?
So there are real interest rates and there are nominal interest rates. So the nominal interest rate in Bitcoin Lightning Network from somebody who's really good at routing activity looks to be somewhere around 0.5%. So not a very large interest rate, nominally speaking. But from a real interest rate perspective, if you can make 0.5% on Bitcoin, but Bitcoin quadruples over the course of 10 years, your real interest rate will actually look enormous, right? So I think it's important when we're talking about interest rates to think about what currency we're talking about. In the US dollar, the interest rate's around 2%, but the inflation rate is about 2% or maybe a lot higher depending on who you are, right? Or maybe a little bit lower depending on the statistics that you're using. So real interest rates, nominal interest rates, they're different things, and I think Bitcoin offers, while it might be a very low nominal rate, potentially on the long term, a very high real rate.
All right, and we have time for one more question. We'll go right here.
Hey, Nick. So I wanted to get your thoughts. Like right now, Lightning Network is really, like it's playful, it's experimental. Like a lot of people, like I use it regularly, but it's like to feed chickens on like Poyo feed, you know? And like the fact that there's actually a realistic interest rate, essentially, or a return for having channels now, when, like if we had like a 10 or 100x increase in the number of people actually using Lightning, in the space of like, you know, we'll have new nodes and like new competition, do you expect when there's real use there, the interest rates actually go up? Or would you think that competition might actually drive it down? Like, what do you think the play is there when it becomes like a real payment network?
Okay, yeah, thanks, Guy. That's an excellent question. I think that the interest rate will find a natural rate somewhere around where the first really good routers establish their rate. Because every asset, every currency has this natural time value. Gold has it. Storage rates are pretty much consistent across centuries, right? Government borrowing rates and fiat is somewhat consistent across centuries, somewhere in the single digits, whether it's high, low, single digits. So I hope that Lightning Network gets a lot more usage. I also hope that that drives a lot more competition in the routing arena and drives rates down. Because the natural time value for Bitcoin, the routing premium that we should have to pay shouldn't be too high. Bitcoin is too easily routed without taking counterparty risk. All you need is technical capability, right? Anybody in this room can run a Lightning routing node. You just have to study how to do it. And as someone who's writing about it, I've really tried to do this, and I have not been able to achieve any level of expertise relative to the coders, programmers, computer science experts in the arena. So they're going to be the ones that are going to do this the best. They're going to make the right fees, and they are going to drive competition in the industry to keep rates low. So I don't view this as usage driving a runaway interest rate of profitability. Rather, the runaway usage will drive more capital dedicated to the network, and that will drive interest rates down, hopefully. And to the disappointment of anybody looking to profit in a very material way off of this.